All eyes are on next week's Fed meeting, where markets are pricing a near 97% chance of a quarter rate cut and another likely in December. In plain terms, policy shifting from restrictive towards supportive, and that's beginning to ripple through both the markets and the broader economy. On inflation, the data continue to move in the right direction. The pass-through from tariffs hasn't been as strong as feared, and rent inflation's cooling. That's giving the Fed room to focus more on the labor market, where hiring has slowed but layoffs remain limited. It's that employment light expansion we've been talking about. Meanwhile, earnings season is off to a solid start. More than 80% of companies reporting so far have beaten estimates, and sales growth is improving across nearly every sector. So it's not just a tech story. That balance between steady profits and moderating inflation helps explain why markets have held up even with all the noise around Washington and trade. So what's the takeaway? The setup into the Fed meeting looks constructive: cooling inflation, resilient corporate earnings, and an economy that's slowing, not stalling. Together, they keep the door open for a gentle policy pivot towards supportive policy and a healthy backdrop for long-term investors. Thanks for tuning in. We'll see you next week with more insights.